Hey, welcome to Eventual. This is your OG prediction market show. I'm Alex Keeney, your host, and riding shotgun with me today is Brian Golden. We've got a
Well,
great show lined up for you today. Wisconsin and South Carolina go to the polls, so we're going to ask how Francesca Hong and Darlene Graham are going to do. Inflation numbers are coming in tomorrow, so we're expecting a lot of markets to move on that, and we've got the literally best in the world here with us. And then for the back half of the show, we've got John Turek, who's the founder of JST Advisors in the financial services world. And he's going to be talking about Anthropic and the so called AI boom and bubble. But first up, remember to check out Polymarket. They are back in the United States. Just visit polymarket.us, and they've relaunched their desktop application too. So this is kind of a big day for Polymarket coming home. That's polymarket.us. And then finally, before we get started, a quick note about the legal and everything else. Just trade safe, everyone out there. This show is not financial advice. We talk about prediction markets for informational purposes. That people on this show could be holding positions in what they're talking about. They might change them, they might not tell you. So this is not an endorsement of any financial choices you might make. And then finally, if you're using polymarket.us, remember it's 18 and over only. Restrictions and eligibility requirements apply. Trading is risky, 100% loss can occur, and it's not available in all jurisdictions. So see polymarket.us/TOS for more information. And now let's get started.
Higher performance.
I hear myself echoing off the songs, Brian.
Nothing has been implemented in a way that nothing else will ever go.
Brian, coming to us from the road. What's going on? Are you cosplaying as a farmer right now?
I was at a goat. I did feed goats with my daughters this morning. We did not grow any crops, but I guess someone who raises goats is a goat farmer, technically. So, as you can see, I'm in the North Woods. I'm not recording a hostage video. This is just a lovely cabin somewhere in the North Woods. And yeah,
That's good.
man, summer travel. Have you traveled? Are you locked in? You just locked in all summer, or you get on the road too?
I would define myself as highly locked in, but I did get to Seattle this past weekend, and I've got no grudge against Seattle, but it is not a keen dog town. I don't think my future is in Seattle. But hats off to you IPA drinking, like salmon eating people of the Pacific Northwest.
Just be honest though. What did you not like about it? Was it the people?
No. It's just like,
You don't
look,
like the
like some
people?
places have a vibe that's yours, and some people have some places have a vibe for someone else. Like it is, that is someone else's vibe. I'm glad they have it. I will stick to being a West Coast ride or die in the state of California.
Okay, fair enough. Fair enough.
Okay, so we've got a lot to talk about with elections, AI, inflation print, but let's also just mark the date. Let's light a candle. Let's like rip a shot. Whatever it is we do to celebrate. Nate Silver's election model dropped today. This is very exciting. Like, is this a big day for me? Is this a big day for you?
It was awesome, man. We were just like sitting here prepping for the show like 15 minutes ago, when all of a sudden, as a Silver Bulletin subscriber, I got the email that was like, boom, model drop. I feel like whatever you think of Nate, pro, con, I'm generally kind of a Nate guy,
Yeah.
but a Nate defender at least.
Mhm.
It's like there's something really nostalgic about that election model pops, and it's like there's so much information, and he's got it all nice with like the blue dots and the red dots, and there's
Mhm.
sliders and you can move things, and it's just candy. It's
It
fun.
is. It is. It's very special. Like we love to throw shade on Nate when it serves us well, but like let's be honest, he's the OG. I did get the
Yeah.
confidence to make some midterm buys that I had been sort of circling.
Okay.
I look like throw rotten vegetables and tomatoes at me if this looks stupid in a month. But I bought some Josh Turek shares, the Democrat running for Senate in Iowa. And I bought some Sherrod Brown shares. He's like the old lighthouse keeper who's trying to run for his seat. So I kind of went big on Democrats when I saw that model pop.
Yeah, I mean, just you should all subscribe, do your thing. It's well worth it for the however many dollars a month for Nate's Substack. But the short version is he's a little higher on Dems to win the Senate than the markets are right now. I think the House price is pretty similar. But one thing that makes me nervous is a lot of the places he is higher on Dems than the markets are the upper Midwest, like
Mm,
Iowa and Ohio and Michigan,
Yeah,
where
we know how that goes.
we're going to get into that, but we saw a pretty huge polling miss there last week. So I think if you're a Democrat and you see polls look great in the upper Rust Belt, you get a little bit of the heebies. So, we'll see.
Yep. Like more armies have bled and died there than on the gates of Moscow. That's for sure. Another
great, Bob.
newsletter, by the way, that everyone should subscribe to is Eventual's newsletter. We relaunched it last week, so we have this really cool subscriber-only feature, free subscriber-only feature, by the way, called 5 Chart Friday. So we just pull out the 5 charts that tell the whole story of prediction markets for the outside world. You're going to want that. And then we just relaunched. I'm told that I'm supposed to come up with a better name for it, called Smart Money. And we survey the best traders at the beginning of the week for what they're thinking about. So subscribe at eventual.news/subscribe, or just go to our Twitter or our webpage, eventual.news, and you will be ably served. Brian, we have a note to salute college football coming back soon, but I think what we need to really salute is inflation reports coming back tomorrow. So I'm gonna cue us into that, and then I'm gonna let you do your thing.
Yeah.
All right.
Let's talk inflation.
Let's talk inflation. Goddamn. All right. So Ananya Chetia at CNBC writes the perfect setup piece for our show, which reads, "I can't believe this is real. Wednesday's crucial CPI report will show tamer inflation according to prediction markets." And here we go. Prediction market traders expect July's consumer price index will be relatively tame, coming in below the Dow Jones consensus forecast. Monday's odds on Kalshi show traders seeing less than a 55% likelihood that July's CPI rating comes in above 3.3% on a year-over-year basis. They see a 15% chance that CPI comes in hotter than 3.5%. Brian, first of all, I'm not sure if this was written about inflation or if it was written about you. So, are you the entire predictions market on inflation forecasting at this point?
No, I do. I have a pretty significant position this month. Not the whole one. And there have to be counterparties also. Somebody disagrees with me. So, every time we shake hands, someone's on the other side of that to make that trade. So I am pretty large. Tomorrow is going to be an interesting print. I think it's really, they always say it's one of the most important ones. Like, Nikki Leakes from the Journal today tweeted that why this inflation print matters more than most of the rest, which is, what they say about every election also. Yep. It's always the most important one of our lifetime.
Yep.
But I do think you have to admit this is kind of a turning point for Fed policy, and also coming at any of these prints that are going to hit in the last few months before people vote in November. I think are going to have a lot to say about the election.
Okay, so I am not cool enough to even know that Nick Timiraos at the Wall Street Journal is called Nikki Leakes. Like, I just learned that right there. So can you just tell me what the hell you're talking about? So the price action right now is like the market's just assuming, like, what is it? 3.4 to 3.5% inflation. That's like,
I think 3.4 is both what the Wall Street Journal, every bank of the 10 or 12 major banks that forecast it are predicting 3.4. Your boy here, I think, gun to my head, is saying 3.3, although I do think it'll be very, very close. But I think if you want a side here, I think you want the low side for sure. So market saying 3.4, I would definitely much rather be on 3.3 than 3.5.
Okay, and 3.3 right now is a 34-cent trade. So there's a lot of EV there if you trade responsibly. But that's a bit of an underdog pick there.
I think 3.3 and 3.4 is very close to 50-50. Like I said, if I had to choose, I think a slight nudge to 3.3, but 3.4 wouldn't be surprising. But what I think you need to know as it plays into some of the other markets is, at least in my opinion, it's really hard. I think it's going to be really hard for this print to be over consensus. I think it's either going to be a consensus print or an under consensus print. And that really matters when you think of,
why does it matter section? Because I don't even know what consensus means. And
sorry.
So this is the why does it He underlines
Yeah.
it. Who cares, Brian? Who cares? We're just clicking buttons
Well,
and
what
typing numbers here.
what consensus means is you'll get 10, 12, 15 different banks that'll all make their forecast each month for what the inflation print is going to be. Some of them do it the day before, some do it the week before. Then you will also have Bloomberg will survey like, I don't know, 50 economists. I don't know who they are, but I trust Bloomberg. They say they're surveying economists. They will also give them their forecast, and then wisdom, Wall Street wisdom, sort of printed wisdom, sort of coheres around one number that is like what the most people think. This month
Yeah.
it's 3.4. And then that number really shapes expectations. It's actually, I find it really bizarre because that number ends up shaping how the market and the Fed react to the print. Whereas sometimes I feel like if the expectation had been different, but the actual result was the same, you might have a totally different reaction just because the forecasting was worse. So that's all to say is that the conventional wisdom has cohered around 3.4 being the number that gets released tomorrow morning. And I think it's going to be really tough for inflation to be hotter or higher than that. And so I think that my guess is the headlines tomorrow are either inflation comes in as expected, now the Fed has a hard decision, or inflation is softer than expected, and we start to hear the talk about a September rate hike diminish, would be
Okay, so
my guess.
so the yellow brick road here is inflation feeds to Fed rates.
Inflation feeds to
Fed
Fed feeds to markets.
vibes.
Yeah,
Vibes feed to elections.
Right. It's a stone in the lake, and we're one circular ripples. Inflation number, Fed rates, maybe vibes first before Fed rates,
Yeah.
then markets, Wall Street stocks based on expectations of how cheap money is, and then voters beyond that in November. So I think where this gets really tricky is if we start to see a situation where core underlying inflation is getting lower and better, meaning the Fed is less moved to change rates, but the Iran war is picking up again and oil
Yeah.
is getting more expensive. So, like, gas becomes a real problem, even though most of the underlying I have no idea what the Fed would do in that situation, actually, but that might be where we're headed. That's really neither here nor there for tomorrow. But yeah, I mean,
Okay.
it's the most important inflation print of our lifetimes, people. You got to be up at 5:30 on the West Coast to catch this one.
So I saw a line on Polymarket.us that I
Yeah.
couldn't find anywhere else that I thought was sort of interesting. It was just like a naked yes no question on whether the Fed would hike rates in 2026 at all. And that was sitting
Mm.
at 58% when I looked at it. So first, can you describe to me why the Fed would hike rates between now and the end of the year? And second, can you tell me if that's a buy? Because like I just thought
Yeah.
based on vibes that might be a buy.
Yeah, so the Federal Reserve has what's called a dual mandate, meaning their job is to use interest rates to try to balance the risks of unemployment or employment and inflation. And so the reason that they would hike rates is if they feel like inflation, people have too much money in their pockets, there's too much
Yeah.
money circulating through the economy, and they would hike rates to make it basically more expensive to do business, to try to put a little bit of the cooling brakes on the economy so that inflation doesn't get out of control. But like when you're playing a video game you're not very good at and you oversteer all the time, like I do.
Yeah.
The other side of that is at the time they're also trying to make sure people have jobs. And the jobs report that came out on last Friday, was it Friday, I think? Not great, Bob. I mean, lost 23,000 jobs this month, even though the unemployment rate declined. A lot of people that I think are smart said that it declined for the wrong reasons, meaning fewer people just even trying to find a job. So they are always trying to have that balance. The reason that people assume that a rate hike is coming is that inflation has been persistently above the alleged target, which is 2%. So the question, I think the fundamental questions of will the Fed hike rates this year are can inflation keep getting closer to 2%? What do those jobs reports look like, and what is the unemployment number, which is currently 4.1%? Does it stay at that's a pretty healthy level historically? I mean, so that's the balance. I think that price is
60 cents, call it.
I would not be buying the hike side of that. I just feel like these next two core inflation prints are going to be low-ish. And I don't see how 9 people who voted to hold rates in July are going to look at the inflation prints that I predict for the next 2 months and see them as problematic enough to get from holding to hiking by September. Now, that said, there's a lot left in this year. I mean, we've got 4 months is a lot of time. And, I think to whatever degree you think that there are political concerns, I mean, we know that Kevin Warsh has the president on speed dial and takes his calls and has Trump in his ear a lot. Maybe you think that matters, maybe you don't. But
well, it sounds like we should do a little Federal Reserve Kremlinology at a later date. But those prices seem to kind of mirror what you see throughout the exchanges. I mean, I saw a 60% chance that there's no change coming in September.
I'm a little more pumped about buying no hike in September, which is I think 58 cents right now. That to me, I'm holding that, and I'm holding that because I think that the inflation prints the next 2 months are going to be subdued, and I don't think they're going to find their way to a hike in September. Beyond that, I feel really uncomfortable predicting, but that one I actually feel better about than guessing what they're going to do for the rest of the year.
All right, well, let's change gears here. Let's go to the great state of Wisconsin, where we have another tale of woe for the normie Democrats unfolding. You wanna read us in?
Yeah, this is my neck of the woods here. Wisconsin has a 170-mile border with Iowa, so I feel like they're sort of my brothers up there.
You even say it's like, how do you say Wisconsin? Like you hit that hard C like a local. Wisconsin.
That's what it is. Okay, so we got The Guardian here. Rachel Leingang says Wisconsin considers Democratic Socialist for governor amid U.S. wave of progressive wins. Francesca Hong, a Democratic Socialist state lawmaker, emerged as the frontrunner in a 4-way race to succeed Tony. Is it Evers or Evers?
I think it's Evers. I called him Evers for a while, but yeah, Evers.
Let's go Evers. He's on his way out. Doesn't matter.
Right.
The Democratic governor who is not seeking another term, Evers threw his support behind David Crowley, the Milwaukee County executive. Crowley previously left the race before coming back on July 18th after another candidate, Sarah Rodriguez, who's the lieutenant governor, dropped out. And now we have Francesca Hong, last progressive standing, polling with consistent double-digit leads, while also sort of walking back past tweets like her 2020 call to cancel Thanksgiving and her claim that she was triggered in a Culver's because there were too many white people that didn't think she would speak English.
Yeah.
So
this is definitely feeling like what? Like this feels like, we'll go dark here. It feels like the Vietnam War, where like every half-assed army has thrown something at it. The Americans, the French, the Australians, the who knows what, and like just nothing is sticking against this total like Francesca Hong main character energy, but also like Christine O'Donnell, like Todd Aiken, like epic flop energy around her right now. And we just saw this like massive polling miss in Michigan that made kind of candidates like this look a little weaker than markets thought. But right now the line is 95% chance that Francesca Hong at the end of tonight is the Democratic nominee for governor in Wisconsin. And I'm just asking, like, based on what we know and what we know we don't know, like, is that a buy at this point? The 5-cent shares that that there's an upset and that what's his face Crowley actually punches through. Like, are you eyeing that for a buy, or do we just need to get away from this and accept reality that Hong is going to win this?
I have no, but I don't think it's going to win. I
What do you
am
mean you
not
have
at all.
no?
I have the 5 cent side of having no shares on Hong winning.
Got it.
Okay, so I'm fading Hall, expecting it to win. It seems like she really wins easily. It's just kind of the thing that would give me pause about buying at 95 cents is that there hasn't been a lot of polling since both the Michigan result, where you saw El Sayed
Right.
underrun his polls by like 11%.
Yeah.
And there also
Whoops.
hasn't been a lot of polling since the Turkey Gate
Yeah.
and some of these other sort of bad-ish headlines. And I certainly wouldn't be buying at 95 cents here. You just can't really make very much money, and primaries are harder to pull anyway. So
Yeah.
I have
That's
no, but I'm not at all expecting it to win. Well, what I do think is worth saying is I think El Sayed and Hong are different people. I mean, I am on the Democratic side of things, maybe even a little toward the progressive side of things. I think that policy wise, these two people are probably relatively similar. But I think El Sayed presents as more of a serious person.
I think he has
And
spent a lot of time thinking about the things he says, and I like Francesca Hong seems like almost like a victim of her own success to some degree here. Like she does not seem like she's thought a lot about what she said, and like now she's trying to hire people to help her think about what she says and how she, does what she does.
yeah, at the very least, I think that she's sort of clearly been in a communications bubble
Yeah,
for a while because her initial response to the pushback over to cancel Thanksgiving was sort of to double down and be like,
yeah,
it's not great. It's problematic holiday and all this stuff. So look, I think that Francesca Hong's policy wise is electable in Wisconsin in a dim wave year.
yeah.
Personality wise, I have my doubts, but
So,
that's
so
not
the
the question
market,
right now. Question is
the
just the primary.
the market, I was really hopeful. I woke up this morning feeling great. Christmas, an election with a high profile name like Francesca Hong at the top of it. And I thought, maybe I can go buy some cheap shares of Francesca Hong, wildly underperforming her polls, just like Abdul El
Yeah.
Sayed did. Like I saw the 95 cent yes shares and I thought, this is going to be great. But it seems like the market has like learned its lesson a little bit, because if you want to buy those cheap shares of her winning narrowly versus the blowout that the polls expect, like those are 10, 12, 13, 14 cent shares at this point. So I'm not
Yeah.
really quite sure that there's a good trade to make unless you can just glue yourself to your monitor and like hope that one batch of votes comes in favorably for Crowley and you can sell those like 5 cent no's that you're talking about.
Yeah, I think if you're bearish on Hong, the trade that you want to make is no on her winning by what is the top bracket,
Like 20.
15% or something like that. But
Yeah, that's like
I
a
don't know. I mean,
75 cent rate, I
there's
think.
some people who I think the question of how much skepticism to give to progressive crushing polls is a good question. Which did we talk to someone about that
Yeah, yeah,
this week?
we've got some mailbag on this. This is
Okay,
this is
yeah,
don't you just love we are now a podcast that has a mailbag, and we have a mailbag from interesting people,
I love
not
it.
just I hate you, shut up.
Yeah. I hate you,
Um,
Brian. All
yeah,
right.
you should shave. Okay, so this mailbag actually, it's anonymous, but it's actually from someone who is a polling industry veteran, and I'm going to
Yeah.
try and read this quickly, but it tickled me a little bit. So this person writes, "quote Absolute madness centrist hopium here, basically text to web." So this is the methodology that polls are employing in these cycles. Text to
Mhm.
web used to work really well for primaries. The reason was that not a ton of people voted in primaries, so the weirdos who responded to text polls are more representative. But text to web missed huge in Michigan. There was a local poll that came close, and it was done by a boomer firm by actually calling people. So basically, this polling knower of ball has communicated that the text to web methodology might be obsolete based on the massive turnout that these primaries are generating. This person went on to say that like the number of people who voted in the Michigan election was comparable to the presidential election. So I guess the take here, the smoking hot tape is I think the markets are too high on Hong winning by like 15 or more, and that we should be very skeptical of polls now that are conducted by what was just accepted methodology not long ago. So that's sort of gibberish to me, but it does make me feel confident expecting Francesca Hong to perform worse than the prediction markets currently think that she will.
So macro there, the take is basically more young people who tend to be more progressive answer text to web polls, and that um, polls that don't end up oversampling those people end up capturing moderate support better.
Yeah, this person wrote this. I skipped over this, but wrote, quote, back in the prior cycles, really high engagement Democrats were more focused on beating Trump, whereas now high engagement is more antagonistic to the Democratic Party generally. So that
Mhm.
like the engagement, they're measuring something that they don't realize they're measuring. I guess is the point here that they're
Okay.
measuring people who are angry at the Democratic Party first, and people who are angry at Trump second in some of these primary polls. So it's like a distorted sample, I guess.
Okay. Okay. Fair enough. So this person is saying based on that, Hong blowout seems overpriced.
Right, which is I think what we're
Okay.
saying, and probably the
Feels like that might
punditry.
be the case. Feels like,
Yeah,
although, compared to Michigan, even though there's really only one realistic challenger here, there are multiple other people on the ballot. So,
right.
people who are just coming out late for a Hong protest vote may not have as much guidance on where to go. Um,
I think usually it
well,
works the other way though. Like, don't voters
oh yeah,
usually at the last second kind of say, "Wait, I'm not going to like piss away my vote on that dog catcher. Like, I'll throw it to someone who I think is credible."
yeah, you have to have a certain amount of paying attention to know who's credible.
Yeah,
But you're right. I mean, like, I know it works that way in presidential elections. I actually don't at all know if it works that way in Senate or governor primaries. But if you say
yeah.
it does, I'll take your word for it.
Well, I appreciate that level of specificity. I mean, again, I think we're sort of still converging around the same trading strategy here, which is
Yeah.
look for a cheap way to anticipate Francesca Hong not doing as well as her polls say, but don't expect to wake up in the morning and find out that what's his face Crowley is the Democratic nominee from the moderate side.
I would also be curious. I'm just thinking of this on the spot, so careful, careful.
Yep.
But the other market that I think is obviously intertwined here is the general market for who wins the Wisconsin governorship in November. And
Yeah.
then the market is assuming that Hong, as the 95% choice in the primary, is the winner. And that market has Republicans as 60-40 favorites, with
Right.
Tom Tiffany being the Republican candidate. If I'm curious how that market moves. They always say it's already priced in. Um, if Hong starts to look vulnerable, that one is probably moving too,
Yeah.
because I think almost any other candidate on the Dem side is seen as just more viable than Hong in
I
November.
see.
So you might have a second eye to that one if things start to look hairy for Francesca.
I see. This is so the idea being, and we saw a little bit of this with Abdul Al Sayad's prices, is that if Hong emerges as kind of like a wounded duck, kind of flapping one of her wings like this, and just barely getting off the ground, that traders will hammer the Republican side of that line, and we'll see the Republican price go up just based on the
Yeah.
weakness that she showed with her own
Or
coalition.
yeah, or on the flip side, if Crowley looks all of a sudden like this might be a game, probably
Right.
won't be, but if it does, it's possible that the market's attention is fully focused on their head-to-head battle and not realizing that Crowley winning would probably fundamentally reshape the price in the main November market as well.
All right. All right. So we have an emerging not financial advice strategy for people interested in the Democratic primary. Let me remind you again, by the way, I'm gonna say it a million times between now and election day. Subscribe to our newsletter. we do this in a concise way twice a week. So visit eventual.news/subscribe and get on our email list, and you can get all this information quickly, but not with the same level of sexiness that you enjoy when Brian Golden is here with us. Brian, with that plug, I'm going to advance us to South Carolina.
Yeah.
I personally am more interested in this race than the Wisconsin race, but I personally also have a connection there and used to work in Republican politics. So maybe we're just sort of showing our internal biases.
Yeah.
All right.
I know almost nothing about this one. So
No, you know everything. You can't say that. You're a G. All right. Well, I guess I'm just monologuing here. All right.
Lindsey
South
Graham's
Carolina.
sister, right?
What?
Tell me more. Is it nepotism when someone takes a job after someone dies, or is it only nepotism if like the living person gives them the job?
You know,
Is
I'm
it going
not
to count
sure,
as nepotism if she wins?
but we're talking about Darlene Graham, by the way, who is Lindsey
Yeah.
Graham's sister. There was a great joke from like Ralph Norman or Russell Fry or something like that, where it's like he was like, Donald Trump, like President Trump can't just bequeath the Senate seat and a sympathy card. Like I'm gonna get in this race. Like it was something like that. So all right.
So what's the dynamic here?
Look, I'm gonna set it up. I'm gonna tell the people what the dynamic is.
All right.
Over to Alec Hernandez at Politico. Alec, we didn't meet each other when I worked there, but thank you for writing this story. This story slugged, will Darlene Graham face the same fate Pamela Evett did in South Carolina? He goes on to say, a special election Senate primary on Tuesday, triggered by Senator Lindsey Graham's sudden death, has all the makings of the roller coaster governor's primary back in June. A frontrunner endorsed by President Trump, that's Darlene Graham, but facing a steep uphill battle to consolidate the field behind her and the looming threat of a runoff election that could lead to a late surge from another Republican. So we'll put some numbers around it. Darlene Graham, again, Lindsey Graham's younger sister, who has been appointed temporarily into this seat by Donald Trump, is about 50% favorite to win this primary. Ralph Norman, a longtime kind of firebrand congressman, is at 30%. And then Russell Fry and Mark Sanford in the markets are trading around 17% for Fry and a little lower, call it 10% on and off for Mark Sanford. Okay, so let's talk turkey here. So one of the dynamics that is evolving in this race is there are a lot of fake polls surrounding this race. A lot of like highly partisan polls, a lot of Trafalgar polls, and like Emerson, which is known to be one of the best pollsters in the country, has had like a very different view on this race, which is forget Darlene Graham, Ralph Norman is actually the favorite to win this race. So like some of those polls are in the past, the race has changed a lot, but like, do you value that information at all, Brian? Or, are polls that are, call it 4 to 12 weeks old, just not really that interesting to you anymore? 4 to 8 weeks.
I mean, it feels like with any primary, which are already hard to poll, this one has an added layer of difficulty, which is that you have one big candidate who has not been running for this seat forever. So the opinion of that person is probably more malleable. I guess none of them have been running for this seat forever, but at least some of the other two have been, public faces. Feels hard. I mean, I guess my big question here is there like a unifying theory of when the Trump endorsement works and when it doesn't? Because we've seen him, pull some absolute goobers like up by the bootstraps into office, and we've also seen him just absolutely whiff on. So like,
I think here's where it doesn't work. It doesn't work when the
no?
state establishment is like totally opposed to what Trump wants to do. Like I feel like a lot of times, like that's like the Pete Ricketts play or something like that. But when the state establishment is in line with Trump, it seems pretty unbeatable. But like I do think that this is up for grabs. What about let me pitch you a trade.
Yeah. Okay.
All right. I'm going to pitch you a trade. All right. So everyone who's following this race is like super high on Russell Fry. He's this young, early 40s congressman from like Myrtle Beach or whatever that district is. He's a self-proclaimed MAGA warrior. Like it's like a call out in every one of his ads, like MAGA warrior. But you laugh, but you like watch it and you're like, this guy's like, he's a smart guy. Like he knows what he's doing. So Russell Fry has sort of come out of nowhere and ascended in his polls up to basically parity with Mark Sanford, the former governor and congressman, Ralph Norman, the aging boomer fire in the belly guy. And so like I'm wondering, is this a buy signal? Like I can get 17-cent shares that he wins the primary, or I can get 25-cent shares that Russell Fry will be the second place finisher. And all of these candidates are kind of margin of error. So like we're sort of betting on who gets eaten by the bear and who outruns it. Like what does your spidey sense tell you about how to bet kind of three candidates who are all polling about the same to be second place finisher tonight?
Probably just look at the margin market and see when one of them spikes and take the no side, because I guess I would be skeptical that the market is super smart at watching this evolve in real time, given that there's not huge ideological overlap here where it's going to be easy to just map on to like, oh, the cities are going to do this. This is one that I know very little about, and if you made me trade it, I would be trying to take advantage of the market overreacting to information as it comes out.
Yeah. Well, I think I'm a Fry guy. I put in a buy in. I think I put in a buy at 22 cents to get Russell Fry as the second place finisher.
Okay.
So I figure at the end of the day, it's probably better to have the opportunity to go from 22 cents to 100 cents in a day than it is to buy him in the main market to go to runoff and have him go from like 17 cents to 35 cents in, a day or something like that.
But this is one that has a runoff, right? So the
Right.
runoff. So is there any way that any of these people clear it on round one?
I mean, it's possible. It would be Darlene Graham, but Darlene Graham's polls top out in the 30s. This is like it's kind of her versus the field right now.
Okay. And then do we make any attempt to think about what consolidation looks like? I mean, are the Norman people going to become Fry guys if Norman doesn't make the top two? Is it just sort of everyone versus her? Because that would make it hard for her to win.
No, it's very everyone's sort of. I watched the debate so that you didn't have to, Brian, and they're very distinct. I will say that.
Okay.
Like Norman just seems too old. I don't know if I'm ageist, but like Ralph Norman just seems too old. Mark Sanford seems like he has way too many pairs of rainbow sandals, too many puka shells, like too many golf clubs. He doesn't feel like the man for the moment, but the pricing is on his side. It's like 8-cent shares to get on Sanford to advance to the second round versus double that effectively for Russell Fry. But Russell Fry has been climbing in the polls.
Do you think being young is as big of an asset on the R side right now as it is on the Dem side?
I think in America, people always like something new. That's what I think.
We should tell our last few presidents. There's little retreads. I feel like on the Dem side, there's so much youth energy.
Well,
but
Trump was new.
Well, okay. He was old, though. He was old.
Yeah.
But it's more like I think Democrats feel that they have been burned by old age more than Republicans have. Like Republicans ran their old guy again and he won, whereas Democrats saw their old guy get dementia and like lose in real time. Yeah. So I suspect that it's the old thing is not as much of a penalty there, but I'm not doubting your assessment that Norman seems old and boring.
I will say this though, like Trump was an old guy who acted like a young guy. Like he communicates by meme. He hangs out with the people that young people hang out with. Like there's something there.
True. Okay, so you're not buying anything right now. Oh, you're buying Russell Fry at 20-ish cents to be second.
Yeah, if I can get in, but I think the market's moving in his direction right now, so I might be priced out.
Okay. Okay. Got it.
All right, cool. We'll know very quickly if that was wise. All right, let's move on to our pick of the week. Okay.
Yeah, for sure.
So this is our kind of small, goofy trade that we're most excited about. Do you want me to swing the bat or do you want to swing the bat?
Go for it, dude. Go for it.
I want to take some flyers on Seth Moulton, the former congressman, failed presidential candidate from Massachusetts, to displace Senator Ed Markey. Have you spent any of your life thinking about Ed Markey and Seth Moulton?
The only time is that when Markey had that ad like 2 cycles ago, which was was like a bit of hagiography, Ed Markey, the deal maker. I
Yeah.
like wanted to run through a wall. That was one of my favorite political ads I've ever seen.
Are you actually joking
After
right
that,
now?
no, I'm not joking. I love that ad. That was a great effing political
Oh my
ad that
god.
helped him survive the challenge to Joe Kennedy, right?
Yeah.
Patrick,
Oh,
who knows what Kennedy? Okay.
I-
Yes, I
okay.
love it. Why would I be joking?
I mean, I just didn't know that anyone in history had ever been inspired by Ed Markey. So,
I was inspired by his marketing.
all right. I'm deleting your phone number.
Okay.
Okay, I'll justify the trade quickly, and then we can move on. But Seth Moulton, like Ed Markey, is like so old and like boring, and has been mailing it in since like the '90s, and he doesn't really fundraise. And like Seth Moulton is probably not the man for the moment in the Democratic Party, like chiefly because he's a man. That would be like one place to start. You know, like Ivy League educated, former military, whatever. Like that's probably not how you win a primary in Massachusetts.
Mhm.
But just think Markey is like so much more vulnerable of an incumbent than people are realizing. And at 12 cents, like I'll buy a couple of those shares.
Okay. Okay, well, my pick of the week, that sounds good. My pick is sort of what I alluded to earlier, which is just if we're watching these margin markets, particularly in Wisconsin tonight, I would just be on the lookout for things that get really, really expensive really fast because this hardest thing to do here is react to this information in real time. And just last week, we had this huge whiff in Michigan where margin for El Sayed winning by 15 or more went to 95 cents, and then he won by one. So a disaster of like real time margin betting from the markets. So maybe you pick off something like that again, and just wait for people to kind of overbuy a favorable vote drop in one direction or the other.
Okay, all right. And then Brian, let's close this out really quickly. So the people have spoken to us, and one of the
Hmm.
things that the people are demanding is more educational content. We are a very democratic institution at small d democratic institution at Eventual. We want to service the
Hmm.
people's needs. So I was hoping that you and I could do our first installment of the Not Financial Advice Trading Academy at Eventual. And the topic I wanted to take on for a couple minutes before we flip it to John Turek, who is going to talk about exciting things and like AI and weird European banking politics.
Yeah.
I wanted to just talk briefly about how do you make your first trade? Like, what is like the ideal circumstances to say, I'm going to try trading today and I'm going to try it in this market for like these reasons? And I have a strong opinion about this, but do you have a strong opinion about it?
Yeah, I mean, I think, in total seriousness, you can lose money doing this,
Yep.
and some people have, some people do all the time. So you want to be careful. The first thing I would do is take the amount of money that you're willing to lose on the first trade and cut it in half, and be willing to treat the first trade as an experiment that is not going to make you rich, but is going to try to help you understand something better. And then the two things that I would do are make sure that I'm 100% rock solid on what the rules are of the trade. You do not want to get rules cucked on your first trade by being confused how that thing resolves or when it resolves. I
Yeah.
would make sure I know 100% sure what the date that money is either coming back or disappearing on, and make sure I know what the rules are so that I am just on stable footing, no surprises.
Did you win your first trade or did you get kicked in the gonads?
Boy, I can't imagine I did. I mean, my first entree into this was all elections, and it was, I think, like a lot of people, centered around the 2016 Trump
Right.
Clinton election,
Right.
which I lost.
Yeah.
So I don't remember what specifically the first one was, but probably no. What about
Yeah.
you?
That was like the bloody river Somme of prediction market traders at the time.
Yeah. Hmm.
I think we got some more of that in 2024. Um, So here's what I would say. I would
Hmm.
say that there are a few things that make for a good opportunity to start learning. I like the way you put it. It's like you start learning, which is one, like, can you find a market that has like high enough volume? Because it's nice to be able to like get your money out or kind of go back and forth and understand how an order book works. So like big kind of high profile markets oftentimes are good because when you
Hmm.
panic sell, inevitably like you can go both ways without really like losing a lot of money. I still panic sell all
Hmm.
the time, by the way. um and then the second is that I think people, without knowing it, have like some edge that they're not aware of. Like they might understand the way their local politics work. They might
Hmm.
they might know somebody from high school who's running for office or who works at like a prominent institution or something. Like there's ways to sort of have edge that you might not be thinking about. So there's that. And then like you might have it just in your natural life. Like my first trade was I'm 99% sure I was betting on Ayanna Pressley to beat, who did she beat in that primary? Do you remember that in Massachusetts?
I don't
The
know.
male guy, like, wasn't it like the Massachusetts mailman who had been kind of holding a congressional seat for ages or something like that?
Mm,
Sounds
okay.
right.
I don't know.
Anyway, I was working in Hollywood. Like I was like the woke thing had been going on there for a while, and I was like, oh, this is the direction Democratic politics are going to go in. And I like saw the opportunity somewhere else to sort of
Mm.
follow that. So it was like, so you have
Hmm.
edge in like ways that you don't realize. So if you think about like where you have natural edge and like where there's markets with decent liquidity to kind of test it out, that would probably be my formula.
Right. I think that's good. I think that's really good advice also.
Yeah.
The last thing you want to do is be putting your first money out there on something that you just started thinking about yesterday because it's on you know, the live thing or these trades close tomorrow or something like that. Don't do that. Do something that you put some thought into and have some experience around.
You mean don't bet on like some complex peace process happening between Iran, Pakistan, Oman, and the United States that closes at the end of the week?
Yeah. Don't do that. Don't do that.
Yeah,
All right. That was a good one.
that was a good
I
one.
gotta hop off now. We got a segment coming, right?
Yep. All right, we're gonna kick it
Okay.
over to John Turek, who is the founder of JST Advisors. We'll tell you more about him on the segment. And this, of course, is the much ballyhooed Anthropic AI and French banking, Christine Lagarde. We're excited about this segment. So here we go. All right, joining us now is John Turek, CEO of JST Advisors. John, you've been writing for the Polymarket Oracle newsletter. You've had some pretty sharp takes about stuff that, frankly, I wish I was smarter about. So we're going to talk to you about Anthropic, global macro, and also French politics. I've seen like $200 million trade through Polymarket.com on the French election, so let's not sleep on that. But first of all, John, welcome to the show.
Thanks for having me.
Can you just tell people who you are? Like your name is just sort of showing up in the prediction market world. How'd you get turned on to this motley band of fools?
Yeah, so been definitely been an interesting ride. So I right now I run a macro advisory business serving mostly hedge funds. So we're coming up with trade ideas and FX and rates for hedge fund clients. I sort of got into prediction markets. I would say became interested sort of in like the earlier evolution in terms of like expressing risk in ways that traditional markets can't. And then also, I kind of have a very distributional approach to how I come up with macro ideas. And I thought that kind of prediction markets are implicitly distributions. So kind of got, interested in the space. Um, and thought, there's kind of this, it feels like there's this lack sort of institutional research in this space that's sort of applicable to more traditional markets. And my lane was sort of, maybe we could sort of introduce this, and Polymarket seemed very sympathetic to it. So, kind of been, working with them, sort of getting my stuff out.
Yeah.
Yeah, I mean, I think it's been a really interesting, 6-7 months in the space, kind of watching, both the continued, growth in terms of volume, but then also seeing sort of this institutional side, really begin to take off, both in terms of interest and activity.
I would say we're sort of fellow travelers here. Like I think like trading is interesting by itself, but I don't think that traders understand how valuable the information they have to kind of like larger fish that are outside of the space. So we certainly want to help be a conduit for you to do that. So today I feel like we obviously have to start with AI. So everyone has been talking about the AI boom. Lately, people have been talking about an AI bubble. I think we all just like we're cramming popcorn in our mouths watching this situational awareness fund explode or implode or whatever the proper nomenclature is. We've had security breaches coming out of OpenAI and Anthropic. So never a dull moment in AI, but this has been an especially soapy week or so in the industry. So my plan here is I'm going to read an excerpt from something you wrote for the Polymarket Oracle, and maybe we can use that to crack into some markets. So
Sure.
I hope you're okay being quoted back to yourself.
Yeah, I'm nervous,
So
but I'm ready.
good nervous, right? All right, so John wrote recently about Anthropic's valuation, which you can trade on at polymarket.com. He wrote, quote, last week, the U.S. government reversed their ban of Fable 5, which is cross-cutting impacts on the forward valuation curve. Love that fancy talk. On the one hand, this development could be bearish on Anthropic's valuation based on the fact that it will be harder to release new models going forward. On the other hand, it itself is evidence that the model has a genuine capability leap. The other factor here, as these models improve from a very high baseline, is that it raises the chance of regulatory capture, which would be very beneficial for Anthropic's valuation. So you wrote this piece to basically say that you think that the market is sleeping on how big Anthropic's valuation and IPO down the road could be, and that there is value to trade on that. But first of all, like situate this in the recent news. Like all the news has been about this sort of bearish implosion of Leopold Aschenbrenner's situational awareness fund. So do we need to go back a step and talk about this other market on polymarket.com that is trading at a 17% chance that there's actually an AI bubble burst before we get to these like maybe multi-trillion-dollar valuations? Where are you on that?
Yeah, so I mean, I think it's a really sort of interesting time in the space. Obviously, given the recent news, I think that something that I've been thinking about over the last few weeks, even sort of going into the situational awareness situation, is I think the tail is rising in both directions, and I think that there's been a few things that have changed recently that have sort of added to this. One is that for so much of sort of the AI capex on the infrastructure side, so much of the spend in the AI ecosystem has come from the free cash flow of some of these, behemoth tech companies. And I think that kind of kept the go forward basis and the predictability of that spend to be quite high. But something we saw that was pretty remarkable 2 weeks ago is that Google reported a free cash flow number that was negative. And what this means is that for the spend to continue, and the spend is expected to ramp even further over the rest of this year into next year, means that these companies are going to have to go to the market to get the money to buy this stuff. And I think that's a very big change in sort of the risk-taking backdrop that we're going to be entering. That's not to say that they're not going to be able to get the money. It's not to say that the street is necessarily off in terms of their AI expectation numbers for 27. But I think it does make the risk of disappointment. It does make the terminal risk that there's sort of an unseamless handoff, sort of in this sort of capex into where we get the return on investment from the productivity side. It does raise the risk that sort of timing becomes a little bit of friction. So I think that not necessarily something bearish on its own, and especially not from a timing perspective. But I do think it sort of changes the general backdrop for the ecosystem, because you sort of have a lot more variability in terms of what is projected to be a lot bigger spend. So that's one thing that changed. I think, another thing
Hold on.
Yeah.
But how do you express that? Like, that sounds cool. Like, I feel like I'm on TVPN right now, but how do you express that in like a prediction market context? You just express that by betting on kind of lower valuations for OpenAI and Anthropic, or is there a kind of a more clever on the nose way to do this?
So, I think that there will be, a lot of, variations to do. I think right now for me, where I'm sort of thinking about it is I think that both the right tail and the left tail are interesting. So that part of the reason that motivated my Anthropic piece, and why I think I didn't think the valuation curve that the market was basically pricing was steep enough.
Yeah.
And which is why I kind of like stuff that was like more, the market kind of settled on 1 to 1.5 trillion, and then after 1.5 trillion, the market feels like that's very low odds. I think that that uncertain event should be wider, because I do think we're sort of entering like a higher velocity part of the cycle. But I think that on a go forward basis, there's going to be a lot of interesting things to do in terms of the other side of the distribution as well. But I don't have that. I don't have that trade on my sheet right now.
Yeah. Yeah. So I was looking at that trade after you wrote about it, and it was like I have not seen a trade like this before. Like maybe this is old hat to other people, but if I go to polymarket.com and I pop open the Anthropic valuation market, which you were writing about, like the ability to get like an old school trader who came up on like Predict It would look at this market and say, oh, the obvious thing to do is just accumulate a negative risk position. Like when you see 86% chance of a $1.25 trillion valuation, 63% chance of a $1.5 trillion valuation, 47% chance of a $1.75 trillion valuation, like it starts to just look weird to me. But like, is the idea here that you can just sort of bet milestone by milestone on how Anthropic will slide down the curve, or is the idea here to just like look for really, really long tails, and be bold and just hope to wake up like covered in money? Like, it's just weird probabilities from what I'm used to.
Yeah,
when
I
look at this
agree.
market.
I hear your point. I think it's a little bit of both. I think that my I'm always looking for what I call like what this is the name of my blog. Always looking for cheap convexity. That's
I don't know what that
very
word means.
yeah. It could just kind of like looking for a very asymmetric payout profile.
Yeah.
Um,
Yeah. We like that.
so definitely always looking for that. I would say that sometimes but at the same time for me a big part of my process is kind of like coming up now. Obviously, it's discretionary. I don't have like a systematic approach, but having a good feel for like expected value.
Yeah.
And I do get the sense that some parts of the distribution become too cheap, then there is expected value, even if it's not sort of this very sexy 5 to 1 uh, payout. So I've kind of had a mix in my notes where I've had sort of like what I would call like a relative value trade where I thought two markets were in contradictory terms. I've had sort of 50-50 bets where I thought the EV was cheap. I've also had I think we'll talk about like my Lagarde bet where I think it's like a 5 to 1 or 4 to 1. So it's not sort of one size fits all for me.
Why do you think that the market, I want to say the OpenAI market for their valuation is pretty similar. Like I think it might be a little bit less bullish, but why do you think the markets are just clustering around a $1.5 trillion valuation? Like, is that just human beings being like, it's just such an even number? I don't know. Like it kind of makes me wonder if there's just a lot of faulty thinking that's
Yeah.
going into this.
So I mean, I'm not in the venture world, so I won't make too big of a prognostication on this. I do think that when there is sort of a lack of information, it's very human to sort of center around like big even numbers. I do think that there is some, there's some better data now in tracking like secondaries. And we even heard within like the situational awareness situation, that they were looking if they were going to offload some of their Anthropic, it would be at a $1.1 trillion valuation. So I do think it's a little bit mixed,
And that's probably priced at a discount, right?
and
If
that's
they're-
priced at a discount exactly,
Yeah.
almost definitely,
Yeah.
given their forced seller.
Yeah.
So I don't think that it's the market's not working with no information, but that's definitely very incomplete information in terms of these things. And I also think that what as we get closer to the IPO and you start to get leaks about what banks are going to try to push you at, there's usually an upward drift that I think is a
Yeah.
little bit discounted in these markets.
Yeah, there's some hype. So your trading strategy, so to restate from what I interpreted from your article in the Oracle, was to bet on a higher valuation than the market sort of sees right now. So stop me if I have that wrong. But secondarily, you're just sort of assuming, I think, from this that the IPO will happen, which is currently a 67% probability on polymarket.com. Like, so, like, are those numbers working in tandem to get to your forecast, or am I thinking in kind of
Yeah.
a weird direction here?
No, and I think it makes sense. I don't think it's necessarily a lock that the valuation sort of has to move with them exiting this year. I think the market will, I wouldn't be a no on the 67% number,
Yeah.
because I think the like broader equity market is going to want to see like exits and see these exits go well.
Yeah.
So I think there will be some pressure for this thing to get off the ground before the end of the calendar year.
Yeah.
Um, but as we've seen, sort of like even we got, data this week in terms of like what run rate revenue expectations are. Uh, like the fundamentals of the business are growing at such a rapid rate where I don't think it's dependent on them having an exit this year, especially as like, take the last few weeks that we've sort of had. I mean, if that were to extend for, 2 or 3 months and then most of the calendar year is gone and they decide to wait that out, which is not unreasonable. It might not have that big of an impact on sort of the valuation, because I do think that a lot of what happened in July, not to say that, again, I do think a very big dynamic changed in the broader system that we've kind of now confirmed this handoff from funding the spend in terms of from free cash flow to issuance. That's a very big deal. But I think a lot of also what happened is just that there's too much leverage in the system. That was probably epitomized by what happened this week.
Yeah.
And, that sort of, that coming out could actually, end up being quite healthy. And I think the story of like very big trades, even, with in booms and busts, is there's leverage over extension, there's consolidation, there's leverage over extension, there's consolidation. And, I think that, we're in a higher velocity part of the cycle now. And so again, I do think Anthropic will be pushed to exit this year, but I don't think that like its valuation growth is dependent on that.
So that's all cool. So go back a step though. So I think like the the shining golden orb of like average prediction market trader is someone who sort of instinctively understands how these markets work, but maybe they don't have like the Wharton HBS background and like knowing the words and like
Neither
knowing,
do I, by the way.
yeah, there you go. You are your own audience. But I guess my question is like, if you're someone, I will insert myself into this conversation. Like, I do not have an extensive background in trading financial markets and scrutinizing, public documents and bank research and stuff. But people do have like an instinctive understanding of AI because we're sort of growing up with it. So, like, how does someone who is a good prediction market trader like start to accumulate the knowledge base to trade these very, very high volume, like very provocative AI markets? What is the way in for that type of person?
Well, I think that there's sort of two ways. I think that there within prediction markets, there's still a very good avenue to express sort of information asymmetry.
Yeah,
And that is that the fact that like not, especially relative to more developed markets, there's still, I think there's still a lot more like qualitative edge to be had. Um, I think that people really, understand, because these markets are so new, the pricing dynamics, you know,
yeah,
aren't at where like, I would say the stock market or the bond market is. Um, in terms of pricing the distribution of outcomes. I think that there's a
yeah,
lot of money to be made in prediction markets, sort of having a really good feel for what the distribution of outcomes is. And that to me is like a much more interesting lane to come into this as opposed to sort of thinking about it cleanly and just a binary yes, no. I think that is actually what these markets are, but there's a lot of room, I think, around the edges.
yeah,
Um, because it's not, and this is kind of in my point with the sort of like the Anthropic piece, is the market is, very human nature to price these things linearly. Uh, but this is not a linear event, what's going on.
yeah,
Nothing about it is. And I have a sense it won't be linear in either direction. Um, so I think that, outside of just being a massive domain expert, I think there's a lot of room to enter the space, just thinking holistically about the range of outcomes and finding where those gaps are in these markets, because these markets are new and they price, I don't think they price distributions as accurately as, say, more established markets are. And I think that's a pretty big opportunity going forward.
Cool. Let me just ask you real quick. So, DGen pick here. So I saw the whole world freak out 2 weeks ago, which feels like forever ago, because Moonshot AI dropped Kimi 3 or whatever it was. Oh my gosh, open source AI is coming for us. We're going to be slaves to the CCP because of this. But what I see when I go on Polymarket US and Polymarket.com is you can buy these markets for who will have the best model at the end of July, August, September, and then like what companies will have the best model before the year's over. And you can buy very, very cheap shares of some of these open source, Moonshot, XAI, Alibaba for like 1 cent every month. And you can buy them for 13 cents by the end of the year. Like, do you see, I will use some fancy words, like, do you see that distribution curve or whatever being favorable enough to say, like, oh, maybe I will buy those, 12-cent shares that an open source AI will overtake Anthropic by the end of the year, or I will buy that 1 cent share that could go to like 10 cents, that the right few things will happen in September or October that Kimi or Alibaba or something like that can challenge for, post position. Um, is that a level of idiocy that you would sink to, or is that just idiocy?
So I wouldn't say it's idiocy. I think my approach, especially within the more like highly technical questions like that one, um, my approach is that I think will become interesting is sort of like, what are the relative value dynamics within that? Because I think it's very hard for me as someone who's not really a domain expert to kind of have a really strong view of like who has an outsized chance of being the strongest model. There's, especially now, there's so many. Um, I think that, an interesting way to think about this is have sort of like a cross sectional of, there's, this market of best model. We were just talking about valuation markets, and like, are those two things singing from the same song sheet? And as a trade I did that actually worked out quite well, a few months ago, was looking at, in the U.S. economy, the unemployment rate versus the Fed funds rate, and the distribution outcomes that one market was pricing versus the other, even though functionally they should be highly correlated, given a lot of Fed actions just based off of the labor market. That's, half of their dual mandate. They weren't priced the same. And so, I had a thesis that, buying one, selling the other was a good trade. And I think that within the AI ecosystem, a lot of stuff cross-sectionally, especially in prediction markets, if you look at it, it's a little bit, it's not all congruent. So I do think from that perspective, there's a lot of interesting trades to do that are a little, I would say, picking which model is the best, even though like, one, it could be a very convex bet. I just
Yeah.
don't feel I have enough domain expertise to kind of narrow
Yeah.
that down.
Yeah. Yeah. Okay. Well, let's talk about your other piece for the Oracle. You recently wrote about Christine Lagarde, and I'll quote you, and then maybe I will just make you kind of go back to first principles here. But you wrote in the Oracle quote of this prominent European central banker, very prominent French stateswoman, quote, an interesting trade to me in the macro space that can't really be expressed in financial markets at the moment is that I think it is highly likely that Lagarde leaves her post as president of the ECB before the end of the year. And you go on to make 2 points about where this is also tradable. You said, first, I think Lagarde probably wants to create optionality for Macron before the volatile French presidential election in April of next year. So underline that. That's, like I said, already $200 million of trading volume. And then you say, second, there's also a chance that Lagarde actually wants to be part of the French presidential election itself. So first of all, catch us up. Like, what's the 3-sentence bio of who Christine Lagarde is and why we're talking about her?
Yeah. So Christine Lagarde is the president of the ECB. She has been there for, quite a while now. Her term ends in October of next year. The problem is that there's a French presidential election in April that seems to be quite a volatile one, with more volatile characters like Le Pen doing quite well in the polls and on Polymarket. So there is talk that if she was to resign early, even if she doesn't necessarily, and this is something I highlighted in the piece, is that even if she announces to leave but doesn't actually leave until into 27, the contract does pay off.
Yeah.
So I think that if she wants to either be involved in the French presidential election as sort of this, very pro-European voice, not necessarily directly, but either, contributing to the more centrist campaigns, or she wants to just, have the decision for the next ECB president to be one that's, Macron in France and Merz in Germany's, instead of what she would probably consider a more volatile voice. Kind of paving the way early
Is
would give
is
that
is this
decision.
is this like a Supreme Court appointment where like it matters when she resigns so that like the person who appoints her replacement is like of her worldview? Like, is that kind of what you're arguing here?
That's kind of what I'm arguing. Yeah,
Okay, okay, okay.
it's very uncommon in the ECB's history. It has not happened. Now the ECB is much younger than the Fed. It's only existed 25 years. But that is basically the view, is that the tails in the French presidential election are pretty wide. She's a very down the middle, very pro, traditional European. And I feel like she thinks that, now is for this handoff to be one she likes. I think it's probably better that she does it when Macron is still in the seat.
We can and should say a lot about the French presidential election, but within the context of this trade, so this is the last time I checked on Polymarket.com, 26 cents a share to buy that Lagarde is out at the ECB, the European Central Bank, by the end of the year. And from what I took from you is that the signal here actually is a lot more kind of like context and tonality from her, and it's not like clear edicts. I made a prepared statement, and I want people to understand on the nose what I'm thinking. Am I like reading you right here that's how you're processing her actions?
Yeah. Yeah. So it's been a very interesting back and forth. And you can see on Polymarket sort of how the chart has gone up and down over the course of the year, because it started the year as it looked likely that she was going to do this. And then March and the Iran war happened. And then during that March ECB meeting, she gave this famous line that a captain doesn't leave her ship early. The
Yeah.
odds then of her leaving came down rapidly. And then as things sort of calmed down in July, she was interviewed by Reuters and said that it's possible that she leaves early, which sort of reawakened the odds. And then when she was asked about this question directly at the most recent ECB meeting in July, she said, "You won't see the back of me before 2027." But when
Yeah.
asked the question of "Will you leave or won't you leave?" she dodged it. Which to me, if you sort of juxtapose the idea of saying that you won't see the back of me before 2027, but you won't answer that you're staying, that kind of tells me that you're leaving, but you're just leaving after 2027. And the question is, when's the announcement? And my view is the announcement probably comes before the calendar year turns.
Man, I feel like this is turning into like a Pepe Siva trade here, where you've got Lagarde statements over here, Marine Le Pen's whatever she's doing with her ankle bracelet on or off over here. You've got whatever Trump's doing in Iran down here,
Yeah,
and like
it all
somewhere in the
goes
middle.
together.
Right, right. Good luck. You're gonna need one of those Fable 5 embargoed models to
You're gonna
correlate
need it.
all
The
of
thing
that
is
well.
that that's nice, and I think is worth noting is, I like the trade by itself is there's, as you said, there's a lot of variables involved. It's a little bit speculative, but the market is giving you good optionality on something that I think modally, does seem to be her desire. So I like trades like that where, it's a 4-to-1. I'm not going to lose a lot if sort of the backdrop changes in a way that doesn't allow this to happen. And I do have confidence based off the way she's spoken that this is her desire to do this. Does the Iran war and heightened volatility make it impossible for her to leave? Does something change in the Le Pen situation? There are a lot of different cross currents. But it's not that to me, if sort of the backdrop was right, and I feel like I have a good feeling of what she actually wants. So having that bet from like a 4-to-1 perspective, I think is interesting.
Yeah, I see. Like at a certain point, at a certain point, the price is, sells the story.
Exactly.
Do you want to speculate literally and figuratively on the French election itself? Do you have takes or trades in there? Like,
I
you know,
don't
the
have
market's
I
pretty
don't
hot
have
on Le Pen.
yeah, I don't have super strong takes on the French election itself. Um, for someone who comes from more traditional markets, it's been a bit early for it to sort of be top of mind. Um, you know, I'm I think it's obviously a very important election. Some of the names that are doing well would have like very big reverberations.
Yeah.
In terms of if they were to win. So I think that it has probably become you know having a stronger view on who the winner is will become of increased importance to me. But I'm not at a position right now to say like have a strong view on who I think is going to win.
I'm going to put you on the spot because I think I read somewhere that you have some connection to Israel. Is that accurate?
Yeah, I actually I'm here right now.
Oh, okay. All right. I hope the weather's nice.
It is.
Um, do you want to get in? We had some people, some pretty prominent traders on the show last week, and they were saying that they could sort of smell maybe a BB defeat coming in the upcoming election there. Are you willing to get on that like very dangerous and volatile train that usually ends in financial ruin?
No, I'm not. I think that it's very interesting that you know I would say what's clearly been very correlated recently is that, Trump and his relationship with BB went from being like a great asset of BB in terms of the populace here, and now is sort of morphed into a pretty big liability. As I think the population here feels that, BB's been constrained by Trump in terms of action on Iran. Um, so I think that it's not a coincidence that the eyes and outs on Polymarket have really started to shoot up, sort of in the April-May timeframe, and now is like he's over 60%. So I think that there is, I think the momentum is real. I think the thing that's very hard, uh, especially given like where the odds are now. Um, BB is one of the most savvy politicians alive.
Yeah.
And he's been prime minister here for 20 years, and there's been plenty of elections. So it's not a lack of elections that is so, you know, having to, lay money in effect because the market is, more than 50-50. So it doesn't strike me as a super compelling bet. I do think the momentum is real. Um, because I think that BB's big selling point was that, he has, he has this really good relationship with Trump that can sort of, push Israel's agenda. And now that feels a bit more fractured.
Yeah.
Um, but I've seen him come out of worse.
Yep. 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 Um, all right. Well, John, it's been super cool to have you on the show. Where can people find you?
Yeah, sure. So I'm on Twitter at jturek18. I also have a website, jstadvisors.com. And yeah.
All right. Well, we'll look forward to seeing you down the line.
Absolutely. Great talking to you guys.